Welcome to our exploration of understanding the unbanked. In the connected sphere of the 21st century, you may be surprised to learn that a substantial number of individuals worldwide remain outside the traditional banking system. Who are these people, you ask? They are the unbanked. Shaping the financial landscape in unique ways, they stand as a testament to the fact that the digital age hasn't touched every corner of the globe just yet. Welcome to ftdigest.com. This is where professionals, investors, and enthusiasts come for news and analysis in the world of finance and technology. According to the global financial inclusion data, around 1.7 billion adults worldwide are unbanked. That's a number too significant to ignore. Among them, millennials, the digital natives of our time, are embracing alternative financial services. They're opting for prepaid cards, money transfers, and other unconventional financial products that offer convenience and flexibility without the need for a traditional bank account. Approximately 1.7 billion adults worldwide remain unbanked, highlighting the enormity of the issue. But what drives individuals away from traditional banking? This question brings us to the heart of the matter. There are several key factors that deter individuals from the conventional banking system, leading them to seek alternatives. Firstly, let's talk about customer experiences. Just like in any other industry, banking also revolves around the customer. Unfortunately, many individuals have had negative encounters with the traditional banking system. These can range from miscommunication and misunderstanding to more serious issues like frauds and scams. Such experiences can sour relationships, compelling people to seek financial alternatives to avoid further dissatisfaction. Then there's the cost of banking. Traditional banks are notorious for charging a variety of fees, from account maintenance to transaction costs. These banking fees can add up quickly, and for many, they become an unbearable burden. As the cost of living continues to rise, every penny counts, and the additional expenses of traditional banking can be a significant deterrent. Furthermore, the lack of convenience and flexibility in traditional banking can also be off-putting. In a world where we are accustomed to having information and services at our fingertips, the lengthy processes and bureaucratic red tape of traditional banks can seem archaic. The inability to access services quickly and efficiently can be a major turnoff, pushing people towards more agile and user-friendly financial alternatives. Lastly, the traditional banking system often fails to cater to the unique needs of different individuals and communities. Many people feel underserved by their banks, finding that the products and services on offer do not meet their specific needs or circumstances. In conclusion, individuals face the burden of additional expenses in an already costly economy, prompting them to explore other financial avenues. The drawbacks of traditional banking are numerous, and they highlight the need for a more inclusive, flexible, and user-friendly financial system. As we move forward and the financial landscape continues to evolve, it's crucial that we address these challenges and work towards a more equitable future. Moreover, education plays a pivotal role. In the world of finance, knowledge truly is power. Being aware of the services and opportunities provided by traditional banking can greatly impact one's financial well-being. However, the issue of financial illiteracy is more widespread than we might think, and this lack of understanding can create barriers to banking. It's not just about knowing how to balance a checkbook or understanding interest rates. It's about recognizing the benefits of savings accounts, the importance of credit scores, and the potential of investments. Unfortunately, many individuals are not privy to this information and thus remain hesitant to engage with traditional banking institutions. In some cases, this lack of education is not self-imposed but rather a result of inadequate financial education in schools or communities. This leaves individuals ill-equipped to navigate the complexities of the financial world. Financial illiteracy further exacerbates the divide, leaving many unaware of their options. Privacy concerns also loom large. In a world where data breaches and identity theft are all too common, the fear of personal information falling into the wrong hands is a valid concern. This fear is particularly heightened when it comes to financial information. Traditional banking systems often require extensive personal and financial data, making the unbanked uneasy. It's not just about having their wealth on display, but also about the potential misuse of their information. Moreover, the digital footprint left by electronic transactions can be daunting for those who value their privacy. Every swipe of a card, every online purchase leaves a trail. For many, this is an uncomfortable level of transparency. This is where alternative financial services step in, offering a degree of privacy that traditional banks can't. By allowing individuals to transact in cash or via prepaid cards, these services provide a way to avoid leaving a digital trail. For some, keeping financial matters private is paramount, eschewing institutional scrutiny and opting for cash transactions to evade perceived government oversight. Meanwhile, limited banking services cater to specific demographics, creating a financial landscape that isn't as inclusive as it could be. A significant portion of banking institutions operate under the 80-20 Pareto principle. This principle suggests that 80% of a bank's profit comes from just 20% of its customers. Consequently, banks often tailor their services to this lucrative 20%, typically high-income individuals or businesses with substantial financial transactions. This approach paints a picture of a banking sector that is not fully inclusive, one where a considerable number of potential customers are left on the sidelines. These sidelined individuals often fall into lower-income brackets, those who might not generate substantial profits for the bank but still require basic banking services. The impact of this principle on financial inclusion is profound. It leaves a wide gap in the market, where many individuals and small businesses struggle to access financial services that meet their needs. This lack of diverse banking services can lead to financial exclusion for those who do not fit into the top 20%. Consider the single mother, working multiple jobs to provide for her family, or the small business owner, striving to grow his business but struggling with limited capital. These individuals often find it difficult to access the basic banking services they need, like small loans or affordable banking products. In rural areas, the problem is even more pronounced. Banks often find it unprofitable to set up branches in these regions, leaving the residents with little to no access to formal banking services. This lack of access further widens the financial divide, pushing these individuals towards informal and often risky financial options. This situation underscores the need for a more inclusive banking system, one that caters to a broader range of customers. The rise of digital banking and fintech companies offers a glimmer of hope, providing innovative solutions that aim to bridge this gap. However, there remains a long way to go. To truly foster financial inclusion, the banking sector must challenge the traditional paradigms and strive to serve a more diverse customer base. The challenge lies in striking a balance between profitability and inclusivity. Many underserved individuals are left without viable options, highlighting the urgent need for change in the financial landscape. Lastly, financial histories can serve as barriers. It's like a stain on a white shirt. Once it's there, it's hard to get rid of. Bad financial decisions or mistakes from the past can haunt an individual's present, especially when it comes to banking. A bounce check here, an overdraft there, and before you know it, you're on a blacklist. This exclusionary practice leaves many unable to access the services of traditional banking channels. Think about it. You're trying to get your financial life back on track, but each time you approach a bank, you're met with a closed door. That's a harsh reality for a significant number of the unbanked. The past, it seems, is not easy to escape. Individuals blacklisted due to bounce checks or overdrafts find themselves excluded from traditional banking channels, further widening the gap. These financial histories, unfortunately, create a barrier that's not easily crossed, but not impossible. Remember, understanding is the first step towards change. In conclusion, understanding the unbanked requires us to recognize the multifaceted factors driving financial exclusion. The unbanked represent a significant portion of the world's population, numbering in the billions. They span various demographics but are united by a shared distance from traditional banking systems. These individuals often turn to alternative financial solutions, like prepaid cards and money transfers, for their convenience and flexibility. But this isn't just a story about preference for digital tools. It's a tale of dissatisfaction and disillusionment with the conventional banking sector, spurred on by poor customer experiences and escalating banking fees. Education, or the lack thereof, is another key player in this narrative. Financial illiteracy creates a divide, leaving many individuals uncertain and mistrustful of the banking system. It's a gap that needs to be bridged with comprehensive financial education initiatives. Privacy concerns also play a role in the unbanked dilemma. For some, the prospect of keeping their financial affairs away from institutional scrutiny is appealing, leading them to favor cash transactions over banks. The banking sector itself has its share of blame. Limited services that cater predominantly to the wealthy, adherence to the Pareto principle, and the exclusion of individuals with unfavorable financial histories all contribute to the growing number of unbanked individuals. However, it's not all doom and gloom. This presents a golden opportunity for innovation and inclusivity. By creating alternative financial products that cater to the needs of the unbanked, we can begin to bridge the gap. Financial technology companies are already making strides in this direction, providing digital wallets, peer-to-peer lending platforms, and blockchain-based solutions. There's also a growing call for banks to rethink their strategies, to consider the needs of the broader population, and to make their services more accessible and affordable. By doing so, they can help bring financial services to those who need them most, fostering economic growth and reducing inequality. By addressing these challenges with innovation and inclusivity, we can pave the way for a more equitable financial landscape. The unbanked aren't just a demographic to be understood, they're an opportunity for us to redefine the world of finance for the better. Until we meet again, fdigest.com followers, take care. But before I go, tell us in the comments section what experience almost made you close your bank account. We love hearing from you.